Hello, good morning, everyone, and welcome to this episode of Derek Invest. I'm your host, Derek Miller. Thanks for joining me today. A couple things. First, we're monitoring the indexes. We talked about this yesterday. It's very important right now what happens to these indexes as we reapproach those high prices that they were sitting at. That is at the point at which we'll get to evaluate if that drop that occurred in the last few weeks was a shot over the bow, a legitimate warning for something to come, or whether or not it was nothing more than pushing some fear into the market to get the weaker hands, less knowledgeable hands, retail to sell so that the institutional buyers, because that's what they would have been, the institutional money managers, traders, investors had an opportunity to pick up at lower prices, therefore able to drive the market to a higher level. So we're keeping our eye on that. We talked about it yesterday. It's been pretty smooth sailing. As I put last Monday when we had that gap down in the S&P, it was gap down Monday morning at 3%, and the NASDAQ was gap down Monday morning at 5.5%. I immediately put out a video to buy. That was clearly that was nothing more than driving fear into the marketplace. And so we should see a nice cruise on the QQQs back up to 490. I have that posted on all of my social media. But if you didn't know that, now you do. So we're just watching that play out. I think I had that September 2nd, I believe, was my target date to hit those marks. It looks like we're going to hit them in time. Everything's moving smoothly. So there's something else that's always kind of befuddled me about the market and kind of makes me laugh a little bit. So I thought I would share it with you, which is that there's this seasonality that will take place with certain industries. So right now we're coming out of summer and we're about to head into fall. So what you'll start to see is a lot of natural gas companies start to take over and move higher, and oil companies take over and move higher. Thought process being we're heading into winter. There's going to be usage, a lot more usage. If it's going to be a colder winter, there's even more usage. With your airlines and your cruise lines, when you're heading into summer, people are buying them because those prices tend to push a little bit higher. So I thought what we would do is we would just flip that on its head. And let's take a look at the top 5 airlines right now and top 5 cruise lines, and let's see if they're giving us an indication that they're going to roll over, because that's the counter effect of the rise every year in these different industries. And I thought this would be fun to talk about today. I always try to keep it fresh. If anybody ever has any ideas or something they'd like to see, make sure that you're shooting me a comment or a direct message or an email or something. I'm always happy to cover different areas. All right, let's jump into it. So top 5 airlines and cruise lines. Let's get moving. We'll go through airlines first. I'm going to share my screen with you. All right, let's go here. There we go. We're going to hit Delta. I did American Airlines yesterday, so it is here. I did do it. However, so we probably won't cover American again because I know American will be here. Wow. So this might be a little disappointing. I'm not sure. So Delta, was Delta the airline that they just served all that moldy food on? I think it was. I think it was Delta. If you haven't seen this, you have to check it out. It was some flight to Amsterdam out of the U.S., and they served the passengers moldy, rotten food. And sadly, these passengers ate it, and everybody started getting sick. I mean, how do you not look down and know that you're eating mold? What a weird thing. I think that was Delta. But in any case, it just looks weak as a stock, period. I mean, obviously, there was no run in the summer. This must be where they ate that mold back in May. I'm being serious about that. It must be. Although, something to take a look at is this decline here. The decline in price is very methodic and smooth. And I'll tell you what I mean by that. If you take a look here at where these gaps are, as you see prices falling and then gaps filling, see it fills the gap. You come down, here's a couple of small gaps. Here is a bigger one right here. And then you can see it filling here. And now we're coming down and we have more gaps down here at this low. And as you can see, we're coming up and filling that gap and we're reversing again. This is a strong indication of a legitimate move downward. And I would not say that it looks like it has any signs of stopping at the moment. Yeah, it doesn't look good. I mean, you have a couple of very large footprints here, institutional footprints, that should have pulled this thing out of its downward move. I mean, this certainly should have. And it did not. It actually simply continued the price drop. This might be related to that mold thing. I don't know. If I were guessing, I would assume. I'm not going to look it up. But so Delta, you're out. But you were never in. So I don't know that there's much to be discussed there. Let's move back out to a monthly. I don't like to look at this stuff out of order. I look at every stock the same way. I break down. Here's Southwest. I break down from the longer term. I want to see what does this thing look like over the long term and then break it down into shorter term time periods. Because I don't want to skew my thought process. When you're going in to buy something, hey, is this long term, short term, intermediate term, whatever it is, and so you want the framework, that picture in your mind as well, moving from longer term to shorter term. Because if you get excited about something you saw shorter term, it can skew your longer term vision. Whereas you can say, look, this market or this stock looks terrible in the long term, but short term, hey, I see some moves here. I don't know why, and maybe it's just me, but I'm able to process things that way. And if I go in the reverse, I can skew my vision. I can skew what I'm seeing. Oh, gosh, this one is not good either. I mean, this one's worse than Delta. I think Delta was doing good until they served that rotten food. Maybe they were stealing from Southwest. Now, here is something extremely interesting, and you're going to like this. Now, this is what I was just saying. So in a longer term, literally the last chart was a weekly chart, and I said, wow, look how gross this is. It looked horrific. Now I come back and I see that there is a monstrous gap at 34. This is only one piece of the puzzle, okay? Call it 33, whatever. I'm gonna make a chart out of this. This is worth noting to somebody. This is worth noting for everyone. Now, here's what I find incredibly interesting. So as price breaks down, what do you see? You know, the most important piece of the puzzle anytime you're breaking down any position, any index, any crypto, anything, is our institutions playing in the game? Are they involved? And if they are in fact involved, in what manner does it appear as though they are involved? So let's take a look at what we see here. So as price comes from 33 and it drops, what's the low here? Actually, we can just call it the close here. As it drops to about 29. So that's a monstrous move, right? That's what, 330, that's 4. I mean, you're looking at 12, 13% drop. There is a massive institutional footprint, massive trading activity. Okay, but it doesn't hold, right? That's at $29. Today we sit at 26.23. Price rallied a bit, right? It rallied into the 30 mark, which is not chump change. Then you had a major gap down, and guess what you see? You see another institutional footprint. All right, and that brings you down to the 27 mark, so a bit lower. Price drops off a bit more, down in here to 24.25. Then we see another institutional footprint, and that's up there at 30, and that appears to be selling, doesn't it? Now, here's the only sneaky part that I want you to understand. And this comes down to 25 years of experience. This gap down was used to elicit fear. And that is why the following footprint was on the low price. And that is a massive footprint on this chart, which then lifted price. And look what happened again. Another gap down here. What this is this is a search for retail investors for weak hands. How much pain can they take, and where are their shares to be picked up? Now, you can see on this first gap down, which took you into the $26 mark, they picked up a lot of shares. And when I say they, I mean institutional investors, the more knowledgeable hands, the people able to create a volume spike like that, able to create that level of trading activity off of a price that has dropped from God knows where. Now what happens again? So price, of course, bounces. I mean, what else is it going to do? And there's another gap down. And guess what? You don't have the same volume down here. Why? Because most of the weak hands got shook out over here. So your weaker hands that were going to bail on this stock, they're shaken out. How do you know that? Because there was no buying to be had. Basically at the same price. At that same price, there's just nothing left. So what you want to do then is you want to see, okay, you have to make another run at it if you're an institution. This is a mental game, and the mental game is based on retail's emotions. So what you do is you gap that price back up to 30. Why? Because anybody that maybe did make it through this second price drop here, they're thinking, we're back at 30. And what do then? You wallop them one more time. Give it to them again. Why? Because you're going to bring price back down here into this 26 level to see how much is there, how much supply is there. Is there more retail to quit? Is there weaker hands that are willing to bail so that you can pick up more shares? As you can see down here, I don't know that I would call this like an incredible surge, but I would say that this is probably over, and you are now looking at a run up to 33. So we are going to, in fact, label this because this is a really good example of how the strong hands take the weaker hands' emotions and just, use them and abuse them. I mean, that's the goal here. We're going to make this a little smaller. Yesterday I felt it was pretty darn big. Okay, there we go. So it is the 16th, 8/16, 2024. Whether you play airlines or cruise lines or not, what I hope you gain from these sessions or examples just like this, where I'm able to show you exactly how emotions are toyed with. Whoops. We are on a daily chart here, and this thing has taken a real beating. So the target date is going to be year end. I don't think it will take longer than that. And if this market were to roll over, it would take a bit longer. I'm going to zoom in. I'm going to put a year end just because I got excited and I didn't zoom in to give you the most accurate date. But that's okay because some people don't watch my lives. They only look at these charts, and they won't know what you're going to know. The people that do watch the actual entirety of my live, which is there may be a better date than this. We're going to zoom in and find out. This was a great one today. See, if you can find something like this in any given day, in any given search through different stocks, different positions, you're stoked. This is really cool. I mean, this setup, it just speaks to itself. So now you're at a 4 hour. So because we're on a 4 hour chart, we know this has to go out at least 3 months. We're in September. So it looks like year end might not be a bad date. I don't see any fills that need to take place. As you can see now, this volume down here, there isn't much volume, right? And in this case, that's a good thing because institutional money, the more knowledgeable hands, has been looking for supply this entire time. Supply meaning they want to pick up more shares. Let's zoom in. We're going to stick with that date, everybody. We're going to stick with year end on that. As you can see, so if you're looking more short term, here you go. Here's a gap. It's not that far below you. It's $1 below you. I'm not, in fact, going to put this up. I suppose I can. Let me see if it shows up on the 5. If it shows up on the 5, it'll be, we'll throw this up. This will be a good weekly. Oops, wrong one. This will be a good weekly target. So let's go ahead and throw that up. We'll just call it down here 25.50. There you go. So 75 cents below you. You're looking at 3% below where you sit now. Yeah, I like it. Let's do that. That'll give you a shorter term target for those of you that tune in for those short term targets. And for those of you that aren't sure, hey, should this be a short term target for me? Should this be a long term target for me? What you need to do is you need to get in touch with me and start to do one-on-one sessions with me where I work with you and your personality and who you are and the type of trader you are, and I help you set those parameters. And that way let's see, we're going to put a target date. What is today? The 16th. We're going to give it a full week. I don't know that it's going to take that because the summertime lull is kind of coming to an end. Traditionally, on a 5-minute chart, I can call it 2 to 3 days. We're still in summer though, so I don't want to undershoot here. 16th, 7 is the 23rd. So what you really have to understand as an investor, whether you're an investor or trader, and those are interchangeable terms. I've discussed this many times over. Whether you're an investor or trader or whatever term you like to utilize, if you don't have a fully defined plan that covers the 3 pillars of trading and investing, which is cash management, risk management, and investment management, you are doomed to failure. If you don't know what to do, exactly what to do in any given scenario, your emotions will be manipulated and you will lose money time and time again. Because as I just walked through with you, when I looked at this initial chart, I had zero interest in this stock whatsoever. But at from $26, if you get a nice move to 33 by the year end, I don't think you're depressed, right? That's a pretty good darn move. Let's see here. What do we need to do next? Where are we at? 17 minutes. You know what? I'm going to move into to some of these cruise lines because that airline took a little time. We'll look at Royal Caribbean and Carnival. Why don't we do that? Yeah, they get hit really hard during COVID. I mean, nobody could be on the ship, so let's go ahead and take a look. Yeah, you don't like this. This is the only real area where there's a lot of volume. See this 1, 2, 3. Don't talk about triple tops and double tops and all that. None of that matters. What matters is the trading activity taking place at those high prices. Because if there's a lot of trading activity at these high prices, they're looking to dump the stock even further. They're being institutional investors, the more knowledgeable hands are looking to dump at those prices. And it doesn't appear that that is the case here. Now, you do have an unfilled gap down here, 1250. You know what? It's coming back. It's coming back here. Yeah, that's coming back down. We're going to go ahead and zoom in for a second, just a little more, so we can see something a bit more near term. Well, actually, we can call this one. So I'm trying to get that marker on 1250 there. Yeah, let's go ahead and call it. I mean, we'll call a longer term on this one. It's coming here. So, and I'm going to zoom in. I'm going to do what I mentioned before. I'll zoom in for you guys to give you a more accurate target date if there in fact is one. But yeah, this thing's coming back down. I'm going to explain why here in a second. I'm going to walk through this one the same way I did the last airline, because this too has a pretty cool. It's a great example of Let's see. What did I say? I said year end on the last one. I think this is going to happen much faster, but I'm going to give it to year. Yeah, I mean, I guess it's only 3 months. This won't take this long though. This one looks a little tougher than the last one. Let's go ahead, and now I'm going to zoom in a little bit. I'm going to do a little explanation here because I don't think I did enough, and this is a good example. So why are we so certain that it's going to come back down to this 1250? Well, there's a couple of things here that tell us why. So what do we talk about? What is the most important piece of the puzzle? Where is the institutional money? Where is the strong hands? Where are they playing? Where is their interest? Is it at high prices or low prices? Listen, it is not more complicated than that. Where does their interest lie? If prices are in a range and their interest lies at the top of a range, do you think that institutional, more knowledgeable people that have been doing this their entire lives, do they sell at high prices or low prices? They sell at high prices. So when you see the game being played in high price areas like this and like this, and then prices pulling off, and you see a gap in the background like this tells you everything that you need to know. You now know what the institutional or more knowledgeable hands are up to in that position. Index, commodity, crypto, you name it, okay? It doesn't matter. Cash flow rules. Everything else drools. That was lame. I'm a dad. What do you want from me? All right, let's take a look here. I'm going to zoom in on this thing. Let's zoom into we'll just get into a 1 hour. Short term filled. Get into a 30-minute. I think we have yeah, we're good. I mean, it's going to come down here very quickly to that 1476 area, but it's not. It's going down. All right, let's get back to a monthly. So Carnival, what did I say? Oh, Royal Caribbean. Royal Caribbean looks a little different, doesn't it? Why do you think that Royal Caribbean looks a little different than Carnival Cruise Lines? Any guesses out there? Well, it's a sad truth. Well, not even a sad truth. It's just a truth that when you have more money, and Royal Caribbean is a far superior cruise line. I went on the Allure of the Seas, I don't know how long, a decade ago, more than a decade ago. And it was one of the greatest experiences of my life. It was so fun and unbelievable. It was a 10-day cruise, and it was unbelievable. There wasn't a day of boredom the food was unbelievable. There was a tasting restaurant, right? It was an amazing ship. If you don't know what the Allure of the Seas is, I think there's one a little bit bigger now, but it had a Central Park in the center. It had restaurants that were truly unbelievable. In fact, I happen to love wine, and they were serving bottles of the Camus Reserve Cab, which, like, if you go to even a wholesale off the boat at the time, it was like $175 to $225, and on there they were selling that Camus Reserve Cab at $125. It was absolutely unbelievable. And so, we had it every night with dinner because that was so incredible. But it was one of the greatest experiences of my life. So why has Royal Caribbean not suffered the way Carnival has? Because you might get beat up when you have more income, more money. It's not that a COVID or some other disaster doesn't beat you up. It beats you up quite well. I mean, it's very hard on you, but you have the ability to bounce back. There's some savings there. And that's the clientele of Royal Caribbean. Whereas Carnival, not that it's a bad cruise line. I've been on it out of San Diego. Everybody knows those cruises, right? I've been on them. It's not that it's a bad cruise line, but it pales in comparison to a cruise line that has, a zip line across the center, a Central Park that was like, it just wooded like Central Park. It had 2 fake waves you could surf on. I don't know how many pools and jacuzzis and all that. You had Cirque du Soleil shows. It was like, it's just a different thing. So let's zoom in on this and see what it is. That's my story of Royal Caribbean. Beautiful, beautiful cruise. So if you've never done one and you would consider one, that's probably a place to be. So far, I don't see anything here. In the background, as you can see, lots and lots of buying after that drop in 2020. Let's zoom in a little bit and see what we can see. Is there anything here that serves as an indicator? No, not so much. I realize there's a couple gaps in the background, but they're very, very small. In this particular position, doesn't seem to mind leaving a little gaps open. And you have to recognize that too, folks, that a lot of positions don't. If it doesn't mind leaving some gaps open, they can remain open. Now, I would say that this one's going to fill. Let's zoom in a little more. Maybe I can give you a little near term on this. Price rose to fill that gap. Yeah. Let's see what we have on a 30-minute. You have a near-term gap here. You have further down here, which gets you into what, 140, 139. You're at 158. That's a reasonable size drop, huh? Let's keep going. It's way back here based on high volume. What do we know about high volume? Ooh, what's this? See, this excites you. This is an institutional footprint, and that is not buying at 160. That's selling. Let's see how much we zoom in. All right, let's take it back to a 15. We'll give you we'll definitely throw something up here. Here we go. All right. It is at, we'll call it 140. Come there. It'll be it's not going to be immediate. This is probably one of those classic cases of seasonality where now price is going to drop because it rose. I mean, we're coming out of that travel season. And as silly as that sounds, this goes on over and over. And that's what a lot of people don't realize about the market. They, especially people that say, oh, I buy and hold. I'm not into that. I don't pay attention to that. It's like, well, that makes no sense because that's just not how the market works. The market is constantly in flux. And there are certain things, if you know how to take a look, that are pretty easy to identify and then take advantage of, right? Now, if you don't have a system behind you, at a certain point, target date, we're on a 15-minute. We're going to put this out a month. We're on the 16th, so we're going to go to 9/16. If you don't have a system established, again, those 3 pillars of investing, cash management, risk management, and investment management, you'll get eaten up. Something will get you. You'll get a dozen of these right or 10 of these right, but the one that takes you down will take it all back. And that's why it is so critical to work with someone like myself who has been doing this for 25 years, day in, day out, week in, week out, in the beginning for 60 to 80 hours a week. All right, let me cruise over. I know we've got to be getting short on time here. Yes, all right, everybody. Remember, if you're not good up here, you're not good anywhere. Make sure you get outside today. Do some exercise. See the sun. Smile. Fake it till you make it. You haven't lost yet. You're batting 1,000. How do I know that? You're still here. All right.